This is the Trader Investor. Let's look at the markets closed this week in relation to structure, in relation to area of value. As always, that's what I look at. Was the market intact or did it do something different this week? So today is March 19th, 2021. So we'll be analyzing how this week went. And so as always, I start with save, my structure, my area of value, and my execute opportunities. Was there opportunities to enter or there opportunities to exit for any position that I was in? So that's the framework of today's analysis, right? That's how we look at this. So let's just dive right into the charts and take a look at that. So starting off with the spiders, looking at the structure, it remained intact. I'm looking at the monthly, but the monthly remains intact. Going back to the weekly, again, same thing. It's really intact. It is staying, within the range. Nothing, dramatic going on there. When we go to the daily, this is where you see a little bit of movement because we're in a smaller time frame. But again, we are making higher lows, and it's going to continue to go up. We made a higher high, a higher low. So on Monday, if this opens up higher than today's bar, then this confirms we have a higher low. This confirms we have a morning star formation, and we will resume that uptrend. So overall, the market didn't do a whole lot for this week. It just had more of a sideways movement starting the 10s, right? Between the 10s and today, it's just a sideways movement. We're right back where we started, right? And so nothing dramatic there. But on Monday, we had opened up much higher. So for the week, we did close below, even though we are not below the 10s, we're not below some strong support lines. We're holding those support lines, but we're still closed low for the week. So that's our structure and our area of value for the spiders. If you want to use this as a support line, this would be a great support line. We have this potential morning star at the support line. Great opportunity to enter long on the SPYs. When looking at NASDAQ, the Qs, this one is a little bit more shakier. I've said this multiple times already. The NASDAQ is the weakest because even on my monthly trend line, I see that it has broken that trend line. Somebody could say, well, let's redraw it a little bit because it's now different. And, if we do this, but I'm not very comfortable. I'd like to see a couple of touches. So I'm still thinking that we have broken this initial trend line that we started with at the beginning of the month. And, I don't like moving my trend line just because something looks different, right? If it's broken, it's broken. So that's what I'm looking at. On my monthly, I see it's broken. Then if I go to my weekly, again, that confirms it's broken. But it's this box area that I drew here is a strong support resistance area. So it's bouncing right off of that. So for 2 weeks in a row, it went down to that support area, it went back up, went down, went back up, and so it's a good indication that this might be just a short-term break of the monthly trend line, but it is yet to be confirmed with more technical indications. Like I want to see a new higher high and a new higher low made, and when we go to the daily, maybe we'll be able to see that in a more clear way. So as you see, we have broken the monthly trend line, we have broken some support lines, and we tested another support line, but we're making lower lows here. So I mean lower highs here and lower high here, and then we have a higher low there, but lower low, but then we made a higher high here. So we have a good indication that if we maintain this area here, this is an area where I'll be comfortable. If we maintain this, I'll be comfortable for us to reverse back, and maybe this trend line is our headwind, but maybe reverse that and just continue to push up to the upside, especially if this high is broken, this lower high that we made. If that is broken, then I'm comfortable that we are going to resume the direction that we want to go to. So that's what I would like to see. I would like to see this support hold, and I would like to see price going this way. This is really what I'm looking for a bounce. If that happens, because it takes a few days, I have some room before that long-term monthly resistance comes into play, that trend line acting as resistance. So that's what I'm looking at when I look at the daily for the Qs. But the Qs is not something that I am ready to jump in yet. Uh, I'm more ready to jump in on the downside, because what I am seeing is we're making lower highs, and then we're potentially making lower lows, and the trend line is acting as resistance. So if this is a trend line here, this green line here, that's a support line. If that is broken, again, like it did a few days ago, if that is broken, then it's time for us to consider uh, going on the short side. So something just to look out for as you're thinking about the Qs. IWM, starting on the monthly, very, very strong parabolic move for IWM. Really nothing, ugly about this. It's just a beautiful uptrend on the monthly, and the weekly is confirming the same. We've had a couple of weeks of pullback 3-4 weeks ago, but we're still in an uptrend. As you see this week, it's an inside bar from last week. So this, maybe I'll be cautious. If it breaks the lows of this week, it might go down a few more points to test the trend line. But I just say cautious, but really nothing big to worry about until the trend line is broken. So until it's broken, I just treat it as a pullback within a consolidation area, and we break that consolidation and go up higher. That's just how I'm looking at it. So when I look at the daily, same thing. We make a new high. We are making a new higher low as well. So what I want to see preferably is price does this, and then price does this. This is really what I want to see. If it comes and tests this area here is a very good entry for us, and we'll go to the hourly to find an entry point, but that's really a nice entry, low risk, because our stop loss would be very tight if it does this. Of course, it's okay if it reverses here and breaks the highs. It's okay to enter somewhere there, because the monthly uptrend is our limit, so there's still a lot of room to go for IWM. And finally, let's look at the diamonds. Let's start with our monthly view. Our monthly has a strong up bullish movement, really, really strong. Even weekly confirming the same. And then when we go to the daily, we have this nice channel that the diamonds are trading in. This is a Dow trading in this channel. It broke out of that channel and it is testing that channel. So now what I want to see, because we are testing that channel, I want to see this happen, right? So if on an hourly on Monday morning when I come in, I will check this out, because that's the one thing that is really interesting on this one. On the hourly, I want to see this trend line here. This trend line. If it breaks, I'll actually put an alert right now. So if this breaks, then I know this is a good entry. And I know that this is the time for me to consider my long position, right? So I want to see it break here and go from here. So if that happens, I'm going to get that alert. If that happens, I'm entering that position. Right? That's just what I'm looking for. And I want to see when that breaks, I want to see some strong volume based on average. I don't want it to break on a weak volume. So that's critical for that piece. So in general, so these are the four markets that I'm analyzing. But then let me go into sentiments for a quick overview. Overall, what is the broader market saying about the sentiments? When we look at the put-call ratio, it is yellow. For me, yellow means above 0.8, but it's still below 1, so nothing to be worried about. But it's a caution area. When these two are high, when both the VVIX and the put-call ratio are one yellow, one red, or both red, then it's a possible area of short-term pullback or a deeper pullback, depending on what the fundamentals, economic conditions tell us. But for now, it's cautionary area. So don't put a lot of money into your positions, hedge positions, or be on the sideline. These are some of the three things that I do when I'm looking at my own trading account. So then looking at the spider, the UVXY, and the 10-year bonds, today was a very classic example. I mean, this whole week actually was a good example. The SPYs dropped as UVXY was rising, as bonds were rising. So these two were rising and price was dropping. And today you see this big move here. You see this big move here. When this happened, this happened. This happened. So those two were related. And again, same thing. When that happened, this happened. So it's good to take a look at this as well, because these two are kind of leading indicators. There are forewarnings that, hey, direction is set one way or another, right? If both of these fall, then price rises. If both of these rise, then price falls. And even if we pinpoint actually here, I think it's good to see this. If we zoom out, and zoom out, the last hour of trading, look at what happened. The treasury, the 10-year bond actually rose up during that hour. It really went up. So as that was rising, the markets couldn't finish at the highs of the day. They collapsed, right? And they closed. I mean, not a bad closing, considering that we had gone much lower. But this tells you right there, this right here, this rose, this fell. So if you look at this, it's a good indication. You can just trade the spiders based on these indicators, right? Of course, get confirmation. Make sure you do your due diligence, not just go blindly. Again, I'm not recommending that you just do anything blindly, right? I'm just giving you some tips and helps on how you can look at these indicators, right? The market indicators, the sentiments, to tell you what the market wants to do. So with that, I want to conclude today's session, and thank you very much for joining.